Before we continue, I want to take just a second to talk about debits and credits. Now, I know a lot of entrepreneurs are scared of debits and credits because they feel like it's a concept that's just too foreign and confusing for them to understand. But thanks to sophisticated software like Wave Accounting, you don't have to use debits and credits very often, and certainly not in your day-to-day transactions. However, as you'll see in a minute, there are a few situations in Wave where understanding how to use debits and credits properly will be helpful. So I want to get you familiar with debits and credits and help you learn a quick tip to making the concept of debits and credits easy to understand. Now, to understand debits and credits, we need to stretch back to the beginnings of accounting as we know it, back in the 1700s. During that time, negative numbers was not a commonly recognized business practice, so businesses didn't use subtraction or negative numbers. Now think about this. How are you going to recognize the difference between an asset and a liability if you can't use a negative number? How do you say assets minus liabilities? You can't. So they had to find a different way to do it. And what they decided to do was create two different kinds of numbers. Because that's really what we have, right? We have positive numbers, we have negative numbers. But they couldn't use plus and minus because minus didn't exist. So they had to give these two different groups of numbers names. So they created the names debits and credits. Now the term debit comes from the Latin word which means to owe. So debits represented anything that was owed to the business or anything the business owned. Our assets are debits. Now credit comes from the Latin word meaning to entrust. So credits represented anything that was entrusted to the business. Any of our liabilities and our equity are credits. Now these terms debit and credit should sound familiar to you because we still use those terms in our day-to-day activities today. For example, look at banking. In banking, you have a debit card and a credit card. A debit card represents the money that's in your bank account. You own that money, and the bank owes that money back to you anytime you use that card. So a debit card represents the money that is owed to you or money that you own. Your bank account is an asset. Debit cards represent assets. Debit, asset. Now, you also have a credit card. That credit card represents money that isn't yours. It's actually the bank's money, but the bank entrusts that money to you and expects you to pay it back. So a credit card represents money that is entrusted to you. A debit or credit card represents liabilities. Credit, liability. Now what about equity? Equity, if you think about it, is money that belongs to the owner of the company, but the owner has entrusted that money back to the company to reinvest and to grow the business. So it is also entrusted funds. Hence, equity is a credit. So if you look at the accounting equation, assets equal liabilities plus equity. Assets are a debit, liabilities and equity are a credit. Assets equal liabilities plus equity, debits equal credits. You see how this works? They balance. Debits and credits always balance. And that's how you know that accounting transactions are complete. Now, you can also see that debits are on the left side of the accounting equation and credits are always on the right side of the accounting equation. So sometimes you'll hear people incorrectly say that debit means left side and credit means right side. That's not really how it works, and you know better than they do what debit and credit really mean. But they are right in saying that a debit is always the left side and a credit is always the right side. And if left side and right side is easier for you to remember and understand than debit card and credit card, that's fine. A lot of people remember debits and credits that way. Just understand what the term debit and credit really mean. Now we've talked about what debits and credits are, but how do you use that in an actual transaction? Well, if an account is a debit account, you add to it by using a debit. If an account is a credit account, you add to it using a credit. Now, how do you take away from an account? For example, if I have a cash account, I would add to it with a debit, how would I take away from it? I can't use a negative debit, right? Because negative numbers don't exist. So I have to use the opposite of a debit. So if you add to the account using debits, you take away from the account using credits. If you add to an account using credits, you take away using debits. Now, that can seem a little confusing. We're throwing around a lot of terms now. So for me, it's just easy to remember, is it a debit account or is it a credit account? And then just know if I need to reduce it, it's just the opposite. Now let's take this knowledge and actually do a common transaction to help us kind of solidify this concept. So let's say we're going to buy a used truck for $5,000. We're going to put $2,000 down in cash and $3,000 on a loan. So first of all, let's deal with the truck. Now, truck, what kind of an account is a truck? It's an asset, right? It's something that the business is going to own. So, debit card, credit card. What kind of an account is an asset? It's a debit, right? So to add to the truck account, we're going to need a debit. So we're going to create a $5,000 debit for truck. Now, let's talk about the cash down payment. What kind of an account is cash? Debit, credit. Cash is a debit, right? But we're not adding to cash, we're actually taking away cash to create the down payment. So if cash is a debit account, we add to it with a debit and we take away from it with a credit. So cash in this case is we're going to credit for the $2,000 down payment. Now finally we have the loan. Is loan a debit or a credit? Debit card, credit card. It's a loan like a credit card, right? So loans are going to be a credit balance, and we're adding to this loan, so we would credit loan for $3,000. So now let's tally this all up. We have $5,000 in debits from our truck. We have $5,000 in credits from our cash and our loan. So credits equal debits. So we know that this transaction is balanced and complete. And if you remember the concept of debit and credit, and you remember that debits and credits always have to equal, that's enough knowledge to be able to do most of your common transactions and items that you will need to create inside of Wave Accounting using debits and credits. Thank you for watching the Bootstrapper's Guide to Wave Accounting. If you found this video useful, I encourage you to click the like button below, subscribe to our YouTube channel, and share this video with other entrepreneurs. Doing so will help us to continue creating more videos like this one for you and other Wave users here on the Accounting Lab.